Good morning, good morning, good morning. What is up, folks? What's up, Tony? Good morning. Oops, ops, caps, cops. What's up? Good morning to you, sir. Hope you are doing well. What's up to all our friends on YouTube? Looks like everything's good to go there. 5 by 5, you guys. I tried to get a little bit ahead of myself this morning and make sure that I'm unmuted and screen sharing and all that stuff right at the beginning of the live stream as it should be. So I think we are good to go. You're not hearing me or not seeing my screen or something, call me out for it immediately. So what is up, folks? What's up, Howard? What's up, H Tark? What's up, King Alpha? What's up, Money? What's up, Navy Plum, New Trader, Ray, Tony, Yon, and do not know how to pronounce that one. I'm gonna go with, let's see, Full Mask Dude. Yang Shan Shang. Yang? What's up, Yang? I'm gonna go with Yang. Yang Gang. What's up, bud? Um, all right, yeah, there you go. I figured it out. Give me a second. What's up, man? Good morning. Glad to have you here. All right, so let's dig in. Let's go. We are going to get into talking a little bit about what we're seeing here in the markets in general. Talk a little bit about all the, tariff news, nonsense, and all that other stuff very briefly. Try to keep it as apolitical as possible without letting my opinion show, but I do have opinions and I have a hard time keeping them to myself. Um, what's up, K Money? Good morning to you, brother. So we'll get through kind of an analysis of the S&P futures. How is that looking? How should that be guiding us as we try to make some decisions and find some opportunities in all the chaos that is being caused by the current trade war? We'll get to our trade plan recaps. We've got our member selected trade plans that we did Sunday and did recap on Tuesday. We're going to follow up on those one more time, and then we'll touch on our Tuesday live stream plans, and of course, get to work on some brand new live stream plans for our Thursday session here. So, if you guys have any questions, have any ticker requests that you want to go ahead, start dropping those into the chat. Feel free to do that. I will circle back to those here momentarily, and we'll get to work on them. So, with that being said, let's dig in. What are we looking at here on ES? Um, Kind of a mixed bag, really. And so here's why I say it's a little bit of a mixed bag. I think, we're trying to, I think the market's trying to not break down essentially. Ultimately, one thing that we should all kind of keep in mind is that, absent any kind of major uh, catalysts to the contrary, the market is designed to go up, right? The market is built to grow and essentially prices appreciate and move up over the larger course of time. We all know that. Um, Obviously, when you throw something like a trade war in, well, now the market's not really sure what to do or how to time or do any of that kind of stuff, especially when the kind of the main components of this trade war, those being tariffs, the narrative changes back and forth sometimes within the same day. They're delayed, they're not delayed, there's exceptions, there's not exceptions, there's increases, so it's just, it's impossible for the markets to figure out what's going on. And I think we're kind of seeing that in the price action. And I think that's also why things do look a little bit mixed. I have a feeling unless we start to see, some serious progress and a lot less in the way of sort of posturing and grandstanding. U.S. is essentially and publicly talking shit about China. China's definitely and openly talking shit about the U.S. and even their state media is allowing things to go on that they would not normally allow to happen. To try to really fire their people up and get them on board with whatever it takes. We're gonna outlast the U.S. In this trade war. So all that kind of stuff is going back and forth. Um, but it looks to me like, again, the market's just doing everything it can to not break down and retest the current lows. So if we're talking about this from kind of that mixed bag perspective that I was just mentioning a second ago, a couple of things that you'll notice here, right? We're on the hourly chart here on ES. We do have, a bullish flag working in our favor here on NTS. We are trying to reclaim one of our key supports, key levels as we were watching for potential breakdown below 55.61. These supports, we're starting to try to reclaim those. You can see we're even bouncing back and forth in between them, trying to build them up, but then we lost, that support that we tried to hold. Now that's acting as resistance. Now we're dipping below this one. And I think what really caught us down here just below the support was this 200 SMA NTS key buying pressure confluence, picking that area of buyers up pretty nicely. That confluence, I'm not surprised that we got a bounce off that. However, our SMAs are both trending to the down. Well, 333 is still pretty convincingly moving to the downside. SMA, 200 SMA is trying to curl up a little bit. So we'll see how that plays out. That could be some positive sign of some shift, maybe back toward the upside, but could be pretty short-lived, and again, could also very much just start curling back down and moving back to the downside if today winds up being a fairly red day. But we keep rejecting or having a really hard time holding above. Here you see a very clean rejection, that 333 SMA. So, we are overall, this is a bearish setup, bearish momentum. As long as the 333 is above the 200, we're still overall bigger picture bearish as far as those SMA goes, but there's some bullish signs here on NTS overall, and we are trying to hold the 200 SMA support. So like I said, very mixed signals. There's nothing super clear here at the moment. I will say this, I think if we do see another loss of this 52.60, we could even maybe give it a little bit more room just so we don't get caught in like a liquidity sweep. Just call it 52.50 if you want a nice round number. If we lose that, I think we're going to see probably a bigger drop, closer to 50.51, so about at least a 200-point drop, and then likely to go on and test some of these low of the year levels from there. So keep 52.50 on watch. Let me just bump this up real quick. By quarters there. Okay, cool. So keep that 52.50 level on watch for a breakdown and continuation to the downside. If we do hit that, I think we go back into full-on short the rip mode. I would say I'm still leaning in the direction of shorting the rips is still the better approach, and better opportunities are going to be found there. You just have to be very meticulous. Don't go chasing downside. Like I saw some people opening puts toward the end of the day yesterday, like within the last hour of trading after the market had already sold off pretty significantly, post J Powell getting on the mic and kind of saying this shit ain't good. Yeah, so I think that, obviously once we've made that kind of move, that's not a great place to buy puts, right? You wait for a pullback to some kind of a resistance, like I could kind of see a little bit of a support and resistance level in here that we are now rejecting here pre-market, kind of around this 53.70-ish area. So anyway, just be careful that, wait for those pullbacks and then sell the rips. Don't chase those big drops, I guess is what I'm trying to say. That's never gonna, or rarely leads to wind up being a good entry. Every once in a while you'll have one where you're like, oh, I could have taken puts at any time and I would have made so much money. Yeah, but that's probably excuse me, the one out of every, like that one time would probably, you'd have to take probably 10 losses trying to do that before you ever get that one win. And I doubt they totally offset. You're probably still overall negative across those 11 trades in that kind of example. Whoops, I didn't need to do that. One thing I will say that bulls really need to focus on and try to get back over, and I say until we get back above this level, I would not get too excited about buying the dips unless, again, this changes as time moves on. But from where we're sitting right now, we need to get over 55.61 for us to really start making moves and pushing higher. And then again, below 57.25, I expect short the rip to be the play, and we probably ultimately see new low a year shortly. I shouldn't say shortly, probably within a couple of weeks at the very most of breaking through that level. So anyway, that's a quick market analysis. CMG, yeah, Tony, we'll take a look at CMG when we get to the new trade plan. So let's get through our recaps real quick so we can start working on those, give ourselves as much time as possible. For those of you watching on YouTube, feel free to say good morning, say what's up. Hope you all are doing well. And if y'all have any ticker requests or questions or anything like that, feel free to drop those in the YouTube chat. I am monitoring both the Discord and the YouTube, so as best I can. All right, so let's take a look at Boeing. This is from our member selected trade plan. So this Plan got published Sunday evening. Ran up to the call entry, hard rejection, brought it down to that key buying pressure here on NTS 30-minute, along with a 333 SMA confluence right around there. So not surprised that it got a nice little bounce off that, but ultimately pulling back down and really fighting to hold this support and hold this flag. But this flag has been catching those bottoms very, very nicely so far. So Boeing's actually looking like it wants to stay bullish despite the very negative news about China essentially halting any shipments coming from them. So again, I think maybe investors are looking at that as just a very temporary issue. And Boeing's, future long term is going to be fine. That remains to be seen, but right now it's holding up and not really giving us a great confirmation below that put entry. At least we haven't seen any other ones since around this area right here, but we did have that 30-minute 333 and NTS key buying pressure there. So for those of you using NTS, or at the very least using the 333, hopefully you spotted that, and we're waiting for that to give way and adjusting the plan accordingly, because obviously that setup, or at least this 333 setup, wasn't really in that same spot when we did this plan initially. So always have to adapt from the original plan and make sure that you're factoring in things like your indicators and stuff like that as you make those decisions on how to follow these trade plans. BBAI, this one has broken to the downside and continues moving to the downside. We did get to PT1 there going into the close yesterday, at least within a reasonable range of PT1. It's trying to bounce a little bit off that, but not looking too strong really at all, at least until it gets back over 271. Over 271, it could be an interesting trade. This could also be an interesting one if you like it long term down at these levels, and with VIX where it's at. Might be an interesting one to look to sell some cash secured puts on. I'd imagine you might be able to get some pretty good premiums on those and not have to put up a lot of cash to do that. Like I would think you're probably going to get, probably 25 to probably $40 possibly per contract that you sell. So, stake $2 to make 40 pretty easily. I think is definitely a worthwhile endeavor. Whoops, didn't mean to do that. What's up, Chris? Good morning to you, brother. Glad to have you here. Thanks for joining us. I'm sure you've got some burrito just need back. I'll go get some Chipotle today for you, buddy. All right. So that's BBAI. Baba, this one did make a nice break to the upside. Looked like it was going to run right up to PT1, but kind of stalled out just shy. Again, I have said many times, Chinese tickers I'm not the best at charting them, or they're a little bit more challenging for me to chart, I should say, just because, again, of the constant kind of gap up, gap down momentum that they have. Like this gap up here, we grind along, gap up, like it's kind of wild. But trying to break back to the upside again, keep an eye on it. I would certainly look to take profits a little bit earlier, like somewhere near that Monday high, around 116, even though my target is a little bit higher up there at 116.98. Definitely not close enough to call that a hit. That's a whole dollar off. But make sure that you are taking some profit there. The other thing to do, especially when you're getting in these moves and they kind of move very quickly, excuse me, let me get some more coffee in. Make sure that you are moving your stops up so you aren't letting those green trades go red. Worst case, you want to wind up breaking even, or use this as like a potential add to the position opportunity on that confluence, and then take the small profits, adjust accordingly, all that kind of stuff. All right, so that is BABA, BA, BBAI. We had all the BA related tickers requested over the weekend. Here we've got Apple. Apple we did on Tuesday's live stream. It kind of just middled around here in our range, and then ultimately yesterday broke down after the Jerome Powell press conference. Looks to be coming back up for a back test and rejecting this 333 SMA key level confluence there at 197.03. I would say if this one stays below 197.03, I think that's our entry level, right? Yeah. This stays below 197.03, especially with this 200 SMA overhead. Let's check the 30-minute real quick. Yeah, 30 gives you some room up to there as well. 200 just below, and it looks to be trying to hold that a little bit, but I think that that gets broken if we do wind up with another 170, 197.03 rejection. So ultimately what I'm looking at here, based on kind of a few different time frames and how the indicators and levels are setting up, I kind of really like this 197.03 as a possible, as long as we're below that, go ahead and take, what's up, Unknown Reviews? Long time no see. Hope you're doing well. I'd be looking at probably playing this one to the downside shortly after the open. Again, I don't suggest that often. Keep tight stop, stick to the plan. Your stop's up there at 269. You've got another confluence there at 269 with the 200 acting as a potential confluence of resistance up there with that stop loss average down level. So, take your shot here, average down here, and if it continues up, cut shortly after that. And then just play the plan from there. But this one's kind of looking like a pretty good back test rejection setup is coming on Apple. So keep your eyes on it. That is from our Tuesday live stream plans. And then Amazon, this one did give us a breakdown yesterday. Broke down, dipped up close to that stop loss average down level, but then broke down, consolidated, gave us a nice consolidation back test that gives you plenty of time and opportunity to get in as you see those candles constantly rejecting and finding resistance at our key level. That is a great setup to say, okay, we're getting ready to drop. Let's take puts. We sure enough did drop, got PT1 plus. Another one coming back up for a back test. Yeah, this also looks like a pretty good potential. Go ahead and take the, as long as we're below resistance and rejecting it going into pre-market, this one could be another one that would be good to short near the open. Got a confluence overhead that'll help you on the stop loss average down. So yeah, both of these I like as potential shorts near the open. But again, just be cautious. Although we did gap up, again, shorts near the open kind of makes that, that's another kind of favorable factor to me. And the reason why I say that is because we do have a gap down to fill, which kind of sometimes can be a little bit of a magnet, especially the day that gap opens. The other thing is I think that a lot of shorts have probably already taken profits. But I don't think we'll see a lot of that short profit taking, which would push the price a lot higher out of the gate. And we are getting a little bit of a gap up, so we could see long start to take profit and then bears pile in on top of that and really try to use that momentum to their favor and push it lower. So, oh, okay, yeah, sorry about that. I am trying to, yeah, I've noticed that like there's like something weird going on with our YouTube calendar. I did notice that because like when I'm starting these streams, I don't know. Yeah, it's weird. I'll try to get that figured out after we wrap up today. Thanks for letting me know. I didn't know that was kind of causing issues for people being able to find these. So thank you. So anyway, Apple and Amazon both looking like good shorts as long as they stay below those key levels out of the gate. All right, so we had over here in the mix Chipotle from Tony. So let's take a look at it. All right. Chipotle. What is this downtrend level? Just want to see what time frame I was basing that off of. Ooh, yeah, no, that's still pretty valid. Could even be. Oh, I'm on the weekly. So this is probably a daily. I think that slight adjustment there makes it a little cleaner weekly trend line. I think it was probably a daily the way that was sitting on that one candle. So that's going to be a key factor here. Also, just interestingly enough, Really nice confluence down there on the weekly at 41.75. I'll be surprised if that doesn't wind up being a price target. At the very least, that would be a really good buy the dip level if you like Chipotle long term and want to scoop some shares. 41.75 would be a great place to do it by the looks of things. All right, so let's get into some smaller time frames. I just wanted to see what that trend line was. Let's adjust these levels real quick. All right. So, what looks good? Chipotle burrito. Actually, does sound good. I think I am gonna get Chipotle today. All for you, Chris. Uh, yeah, there is a level right here. I don't have it on my chart yet. I don't know how much of a factor that's gonna be, but definitely something I'm looking at. But I like this confluence down here that if we were to break it, I think it does open a pretty decent move to the downside. I wonder if this daily level has me a little bit low because of like one or two wicks, but really the candles are more concentrated a little bit higher. I don't know how far back I'm at. Okay, there we go. And just want to check this out real quick. Yeah, I think that's exactly what's happening. So I am going to make a small adjustment on this daily level, bring it up there. Actually, maybe even a little bit higher, right there. Do like that as a first price target. Do like this stop loss average down. So it looks like we're maybe just a little bit better than a one-to-one risk reward. Chris, we just talked about this. Now you understand how I start to look at these charts. And as I'm looking at it, trying to find like realistic stops and price targets and all that stuff and entry levels, right? I don't hit the levels trying to force a better risk reward into the trade plan. You just do the trade plan and you find where your levels are setting up. And if you have a good risk reward, okay, that's a good plan setup, right? If you don't, maybe you have to wait for a different entry where things shift to where, you know, there is a bigger move available with a better, closer backstop that allows you to have that tighter, more defined risk reward. Don't ever tailor the plan to try to uh, force it to being like a 2-to-1 or whatever. You got to really be uh, methodical, I guess is probably the right word, about just picking the levels and then setting up your, yeah, you know what, I would take profit at that weekly level. Actually, I was kind of thinking about not. It seems like kind of a tight PT 2 and 3, but I don't think we get all the way down to 43. Maybe we do. That's the level we were looking at for an ultimate buy the dip, wasn't it? That was our weekly confluence level. Yeah, down at 41.75. Okay, so yeah, but there are some things that could stop us from getting that low. I'm just saying if we do get that low, I'm buying shares. Yeah, I think I'm going to stick with that tighter third price target. All right, upside, we do have this downtrend that we're still contending with. Obviously, on smaller time frames, we can see some fake outs and some liquidity grabs above it, but ultimately, until a weekly candle closes above this, it's still intact, although today technically closes the weekly candle, so we did get if it did look like we're going to close today's trading above that, actually could be a pretty good confirmation that we are going to break to the upside. Technically, I don't never really take it into consideration. Do you treat a weekly candle differently if it has fewer trading days than every other weekly candle? I would say no. I think you start getting into uh, things that aren't happening frequently enough to be significant to change how you try to analyze those higher time frames. But just a little thought to myself there for a second that I thought I'd share with you all. All right. It's a lot of chop in this range. Just haven't. I think it's. We're gonna be well above that trend. Sorry, I want to take an earlier entry on this, but I really think the good entry isn't until we get over 51.30, at least what I'm seeing so far. I'm just trying to check and see if there isn't better opportunity. All right, I'm gonna go ahead and caveat this is kind of a possibly higher risk entry, but we're gonna have a plan. So, stick to the plan. They don't all hit, but if this one hits, it could work out really well. Also, just because I said that, do not oversize. Again, this is, I think we may be setting ourselves up for a premature entry. We'll see. Here, that I think would be a good stop loss. This would be our first target. This target. And yeah. All right. So let's plug in this trade plan pilot, and then we'll talk about this kind of risk reward setup. And again, notice that I haven't done anything. I'm not even looking at the risk reward yet. I just want to have, I mean, I can kind of eyeball it and tell you where my risk reward setup is good or not. But again, don't pick your levels trying to force the right risk reward ratio because you have some kind of bias or FOMO or something like that. So, stop loss average down. 7. This is 46.94, 45.26, 44.11, and 43.45. Stop loss at 48.37. Okay. So. Fudge. Oh. There we go. And that's, yeah, I had this on a low dollar ticker, so that Y offset is not good. Okay, so let's talk about this again, going back to our whole risk reward discussion a second ago, right? And this is the conversation that I had with Chris the other night. He kind of hit me up after hours and wanted to talk shop real quick. Oh, let's hide these. So when I'm looking at these setups, right, and whether or not, or what's an A setup, what's a B, or what's a B plus setup, right? I think if anything's like below a B plus, you shouldn't even be touching it. What's an A and what's an A plus setup, right? So a B plus setup would be like bare minimum 1-to-1 risk reward, potentially, as high as like 1.2-to-1 risk reward, right? Hey, Chris, would you mind, if you're listening and have quick access to it, dropping that? I know you dropped it in the chat yesterday and I pinned it, but dropping it in the morning live stream chat, that risk reward table real quick, because I think that'll be helpful for what we're talking about here. You one step ahead of me. I knew you would do it, or be know where I was going with this already. Yeah, thank you. Appreciate it. My man. All right, so that risk reward table, start to pay attention to that Chris just posted in the chat for those of you, I don't know how to share that with the YouTube folks. Sorry. Let's see. Oh, I can copy an image link. Maybe that'll work. I don't know. I don't know if you guys will be able to see this or not. YouTube will even let me post that like that. I guess not. Let's see. I don't think. Yeah. No way for me to do that, is there? Yeah, limitations of YouTube. Oh, yeah, I'm not gonna mess with it. So if you're in the Xtrades Discord, or just look up the risk reward and win rate table. If you just Google that, it'll say every trader should know this. You'll be able to find it if you're watching on YouTube. It's not, shouldn't be hard to find. So as we're setting up these trade plans, right? If you're at like a 1-to-1 risk reward ratio, that's kind of, and really you have to be a pretty good trader for that to even be feasible. As you can see on that risk reward chart, you've got to be essentially 60% or better to really be profitable trading 1-to-1 setups. Most traders trade below 50%, right, on their success rate. That's just, unless you're very seasoned, been doing this for a long time, have strong systems in place, and know how to kind of handle your emotions, you're probably trading below 50%, right? And to get to that point takes a lot of time and a lot of practice and all that sort of stuff. So going back to the conversation on risk reward, A plus, A, B plus setup. So if we've got something that's a 1-to-1, and the way that I gauge these setups is, what is my risk area compared to just getting to PT1? Because sometimes PT1 is all you get. Obviously, our risk reward expands the further into these trade plans we go. So it goes, from example, on the call side, a 1.31 to 2.28 to 3.37 risk reward ratio. But again, there's no guarantee that we get to PT2 or 3, right? But by the time we get to PT1, we know we're taking profits, we're moving our stops up, so we're not letting a green trade go right at that point. And that area compared to our risk area, so in other words, if our entry is here and we hit this and drop below, that's where we stop out. When you compare on the underlying asset what your risk reward is based on your entry to your stop loss and your entry to PT1, if that's in the 1 to 1.2 range, I kind of look at that as like a B plus setup. It's okay. It's not great. Start with a smaller position size and perhaps average up on the trade and add to as you move up through some of your price targets. If it's a 1.25 to like 1.75, I would say that's an A setup. Maybe go like 2/3 your full position size that you would start with. And then A plus is, anything, essentially 1.75 to 2 to 1 or better, just getting to PT1. Now, again, don't let the risk reward that you're trying to establish in the plan influence how you're drawing your levels and how you're how you're setting your plans up. That needs to be very methodically based on key levels and key support resistance. But that is how you can use that sliding scale to influence whether you're going like a third of your full position size, a half of your full position size, or your full position size, right? When I say full position size, I don't mean full port. I mean, if your regular, like if your risk management rules say, okay, my max exposure on any one trade is, let's say, 5% of my account. If you're working with a smaller account, then you're putting in 5% on your A plus setups to start off with. On your A setups, you're maybe doing, 3%. And on your, B plus setups, you're probably starting off with like, 1 to 2%, and then maybe adding up to 3% as it plays out. So, just some things to really keep in mind as you try to kind of strategize and think about how you're handling your trade plans. The other thing, and this is kind of the key, another key to this point, and I'm maybe belaboring a topic, but I think it's pretty worthwhile to have this discussion, is that also means that you have to hold, right? You can't be you can't have that I've been once bitten, twice shy kind of mentality, right? You have to really, so, maybe I've taken a couple of losses, but they were I took my one loss, right? And maybe you're a 40% trader. Well, you're going to take a lot of those one losses. So that means when you do get into a trade that is moving in your favor, don't be greedy, but you got to let it get to your price targets, especially if it is a 2-to-1 setup or whatever the case might be. You can't take those profits early, otherwise you're totally eliminating kind of how these numbers will work out for you in the long run if you take those profits too early, right? So, and as you can see from the chart that Chris posted, you can be 40% if every trade setup that you're taking is 2 to 1 based on the underlying asset, and your first price target giving you that 2 to 1 risk reward ratio. Over the course of time, you're going to take a lot of losses, and it's going to seem like you're really bad at this, but those wins are going to more than make up for your losses. As you can see, at a 40% win rate, you can be profitable if you're doing nothing but trading 2 to 1 setups. Now, again, those setups have to be legitimate, right? They need to be based on the charts and technical analysis, not like, oh, I'm buying a contract for $1. I'm, gonna only sell it for 2 or stop out at 50 cents. Like, that doesn't work. You cannot base that risk reward process on how the options contracts are going to move. Because what's going to happen is, you could hit that 50% stop that will automatically stop you out on an options contract, but maybe you're still holding the stop loss average down if you had done a technically based plan, and not get artificially knocked out of the trade to where you can't ultimately make that 2 to 1 trade. So anyway, I hope that is helpful. Yeah, just like Chris said, no rules, no strategy, no plan. You're going to blow your portfolio. It's just a matter of time. So, if you need help getting through that stuff, ask questions in the chats. Everybody, here is here to help as much as we can. If you really want to kind of take things to the next level, the one thing I recommend to everybody that comes to our Discord, I don't, care who you are, and I've even done it, right? Like, as a top analyst at Xtrades, I actually paid for mentoring with Big Tax when I wanted to start to learn how to trade futures, right? And so your learning journey is never really over, and if you don't have these rules and systems in place, spend some time, get some one-on-one mentoring, spend that little bit of money. It's the cost of a good education. That's a lot cheaper than going to 1 semester of community college, and it'll be a lot more effective for you in the long run. My point. So reach out to Chris or somebody, have them pair you up with a mentor. We've got several people on the team who can do it, and learn, I guess is what I'm trying to say, especially in this current market. Sorry, I got on a soapbox. I got a little sideways there for a second. Let's get back to our trade plan. But I thought that was a good kind of discussion to have, since I just had it with Chris the other day. It's come up a lot recently. So yeah, and that's something, what we just covered is something that I would typically cover in like a 1-to-1 mentoring session. I generally don't get that deep into the weeds of things on these live streams. So you guys got like a little snippet of part of what I do in my 1-to-1 sessions there. All right, so let's get through our CMG live stream plans. And watch lists. And thankfully, Discord has finally fixed their bug, not being able to copy message links. So now we can set this up. Let's go to regular trading hours. Let's get our alert going. Trade plan, any alert. Take this down to the 30-minute. Give it a week to play out. What? Oh, that's May. And this is the CMG Thursday live stream. Regular trading hours, 30 minutes. Okay, cool. Everything should be good to go. So let's talk through this real quick. What are we looking for on Chipotle? We are looking for a break above 49.92 for targets at 51.30, 52.31, and 53.46 with a stop loss average down at 48.87. To the downside, we're looking for a break below 46.94 with targets at 45.26, 44.11, and 43.45 with a stop loss average down at 48.37. Those are your Chipotle live stream plans. Let's go. All right, so go back to the chat. What did we had RTX from Unknown Reviews. Let's over on the YouTube side. What is art? Clearly, I've heard of this before. I need to figure out how to deal with that trade plan pilot. Doing that, the charts initially. Why do I know this name? Aerospace and Defense. Huh. Yeah, apparently I've done some kind of charting on it probably a long time ago. Yeah, back in June of 24, almost a year ago. The dip on it has really been bought up big time. They have earnings coming up in 5 days. That gives us a little bit of time. So what does that put it on? The 22nd. What is that? Tuesday. Is it in the pre-market? So you've got essentially Monday, you swing over the long weekend. So you got today and Monday, or you potentially get into earnings report area or swings, which I would highly recommend. This could be very dangerous with this market. Although, well, no, say that, especially with VIX being kind of, you're already going to have IV crush from the earnings report, and VIX is elevated. That's going to make those contracts even more expensive. Just be very careful. Make sure you know what you're doing before you get into anything that's you're gonna have to carry through an earnings report. Sorry, let me just organize this stuff real quick so it's faster for us to work with this chart. All right, that makes it helpful. Although, I don't know why I did all that. None of those, we're not even close to any of those levels. And let's our indicators for just a sec. All right, just filled the gap there. That's definitely a really good looking weekly level. Both of these gaps, but let's see. Not as convinced on that one. There is something though. I'm still not convinced. All right, I'm gonna just placeholder this for now. There's something in here, but I don't think it may not be not clear on the weekly chart. I'm gonna put it down as a weekly level. That is though. Something there, but to be determined. Same thing there. All right, I'm probably missing some weekly levels, but time is of the essence. No clarity still on that level. This probably is a daily level. It's just a little bit lower. There, so kind of very close to that other weekly level there, but that can happen. Wow, there. Of course, we got this all-time high that we're going to want to pay attention to. Okay, let's take this to the hourly chart. Let's see if we can't start to, on the fly, put this trade plan together. All right, so this, I don't do these often. Chris will tell you, but I don't think we really have there's going to be any other real upside opportunities on this, at least until price action has some more time to play out. But essentially, I'm looking at, as long as we're holding over 130, call it, by open, and maybe even watch for like a little bit of a push and a back test off of 130. I like that entry, even though we're already over it a little bit here this morning. We're not too far over it. We have, I think, a pretty feasible stop loss average down level right about here. It gives you, so it's, kind of an aggressive entry, put an aggressive stop on it that way. If I am a little bit overzealous about that possible entry, uh, it's not, the risk side of it isn't massive. You'll be stopped out quickly, and hopefully, not too much damage is done. All right. So then the other thing we need to take a look at, and Chris and I just covered this the other night, trend-based fib extensions. And really, this is our first push up to it. We've had two, which is kind of interesting, or we retested, but I'm going to go with where we established this current all-time high. Pretty okay trend that takes us up to it off that base candle. This could be just a teeny bit higher there at 136.26. So let's break out our base fib extension tool. There. That looks good. So that'll give us a third price target. The rest of these won't be price targets, but it would be good to have them on the chart since we just mapped out these extensions. Also got one that adds a level down here, which does look like a fairly good support resistance level, right? Not quite as accurate as that weekly, but there's definitely something there as well. So that kind of gives it further validation. What Chris and I talked about the other day. All right, downside. We do have a shot at some downside below this 126.49, and we can share the stop loss average down with the upside trade plan. Yeah, I know this is going to look a little funky, but there is a really good chance that this 118.24 does hold. Maybe just a tad lower, like 118.13, but that kind of is what it is. All right, so let's put the trade plan pilot to work here. We're looking for a break over 129.93, 133, oops, 66. 136.26 and 138.23. Stop loss average down 128.12. Put entry 126.49, 123.3, 119.88, and 118.13. Stop loss average down 128.12. This is shared. So Boom. There we go. All right. Oh, I've got my computer sitting. There we go. All right. Cooking. All right. Here is the RTX live stream plan. Link. Set our alerts. All right, so what are we looking for here on RTX? We are looking, oh, I forgot to save that other one, but I'll go back and fix that later. All right, so what are we looking for here on RTX? As long as it's holding over 129.93, call it 130 into the open, especially if we get a little push and back test off of that. Go ahead and take a shot at this for a move up to 133.66 with further targets at 136.26 and 138 at 223, that's for sure. 38, go with 22. Stop loss average down at 128.12. To the downside, we're looking for a break below 126.49. That should bring targets at 123.83, 119.88, and 118.13. Shared stop loss there at 128.12. All right, folks, that is your Thursday FOMO live stream. As we always say here on the Xtrades FOMO live streams, plan your trades and trade your plans. Keep your wins big, keep your losses small. We just talked about that, risk reward. And thank you so much for joining me today. I do appreciate it. We will be back next Tuesday morning at 8:30 a.m. Eastern Standard Time. Until then, enjoy the long Easter weekend. Have some relax. Oh, golly, get some R and R. There we go. Rest and relaxation with your family members. Unplug from the internet and the news cycles for a little bit. Recharge your batteries and get ready to come back for a full week of trading next week. And I will see you back here Tuesday at 8:30 a.m. Eastern Standard Time next week. Until then, take care. I will see you all in the chats.